love the channel and find it useful in becoming a happy retiree. Subscribe today. There's an awful lot going on in the world of your wallet, your money, your 401k, everything that we talk about here on the show. I don't even know where to start today. We'll do a quick market recap. I want to talk about, I am worried though. I do have I'll get serious for a minute. My worry is that, and I don't know if it's as many of you listening, it might be my readers from the AJC, and I got a lot of letters over the last, let's call it the last month, and I'm worried that politics, like never before, and there's always been polarization, but we've never had a country that's so divided and so polarized when it comes to politics. And the worry with that is that politics clouds your judgment. And it clouds the judgment of such a big part of our nation as we become polarized. And that polarizes you and blinds you, not you particularly, but if you have an angst against the administration today and you can't stand Trump in the White House, right, then it's hard. You don't even want to hear that things are good. And to some extent, we heard the same clamoring when Obama was in office. And if you hated Obama, you didn't want to hear that the economy was good under Obama. And the same thing's happening today under the Trump administration, but it's even worse. So I put out a letter that talks about tax reform. And you know that I've been on the forefront of tax reform. We've been talking about it all of 2017. We talked about the Trump PR tax book tour tsunami that relates back to tax reform, meaning that he was going to go on a big tax reform book tour / PR tsunami, and it worked. Ultimately, the nation was behind tax reform. Congress came together, did tax reform. A huge part of the country said it'd never get done. We talked about it for months, said it would get done. Of course, it did. And it did before we even thought it would get done. It's already in the books. It's law. Happened at the end of 2017. And the problem, though, is that, so I write this letter that says, look, tax reform is going to add to the economy. It's going to be $205 billion worth of economic stimulus. Companies are going to have more in their pockets. Individuals are going to have more in their pockets. And it's going to generate economic growth without question for the next couple of years, particularly right here in 2018 and 19 as the beginning push of this tax reform hits the economy in a good way, in a very good way. And that's just, I went back and looked at 2003 with the Bush tax cuts, with much smaller tax overhaul. It wasn't even an overhaul. It was really just a tax cut. It was about $350 billion over 5 years, which this tax cut is $1.5 trillion over 10 years. So it's dwarfed in year and longevity and size. And I'm just looking at 03 as an analogous and saying, look, GDP doubled and stayed much higher once the tax cuts were enacted. Well, this is more than just tax cuts, but let's just call it just purely from the size of economic stimulus. More money in your pocket to spend, i.e. economic stimulus, more money in companies' earnings because they're paying less in taxes. Okay, all good things for the market, for economic growth, for economic development, for our psyche, for how we feel as a nation, our confidence moving forward. Hey, I don't think my taxes are going up anymore. They actually went down and they're not going up anytime soon. These are all things that contribute to a brighter outlook for most people. And just using history as a guide, we said, look, it's going to be good for the economy in 2018. Well, you cannot imagine the hate mail that we have received because of that. I haven't even mentioned anything about politics. Nothing. Zero. Didn't say, hey, good job, bad job. Didn't talk about how I was excited that it happened. Didn't say that I was disappointed that it happened. Just, it happened. Economic fact. It's coming. Hate mail to say that the fact that I think it's going to be good for the economy is that here's one email. Let's go right to this. One email I received. You are a libertarian. I don't know where they get that because I'm not really. Trump-loving scum. That's one of the first letters I've gotten in just the last few weeks. All of the beep tax cuts are going to the filthy rich. Again, not true, totally misinformed person. Next letter. Mr. Moss, you are blinded, sir, by rose glasses and Republican red lies. What? We're not talking about not being political here, not being partisan here. We're just looking at the economic history books, what happened when we had tax reform and tax cuts, what it did to the economy, and using that as a guide to figure out what's going to happen in 2018 so that you and I know what we should be doing with our investments. It helps guide where we should be invested in 2018. We've got to understand the economy. The one thing that we can understand is we can understand the economy, we can understand earnings. Very difficult to understand the stock market itself in any given week, month, or even year because of all the other variables that impact markets: confidence, how we feel, emotion, outside exogenous events. All of these other things also play into the market. But economists and what I spend a lot of my time studying, we can understand what's going to happen to the economy because there are less emotional variables that can swing the economy up and down in any given day, like the stock market. So we do our best to figure out the general direction, the macro look, the big picture look of where we're headed as a nation and a globe economically. And then that helps us figure out earnings. And that's a slightly easier job than figuring out the daily moves or iterations of the Dow Jones Industrial Average. So we at least figure that out so that we know the general direction of the tide of where our nation is taking us economically. And that's it. And that is what we are trying to do. And we're not playing politics here. I try my best not to bring politics into the conversation here on Money Matters. There's a lot of other shows that do that right here on this station. This is one of the great things about WSB Radio. We are news, we are talk. I'm go by economic history and look and see what happened when people ended up with more money in their pocket. Post 03, again, $350 billion. Today, this is $1.5 trillion. And oh, by the way, these are real reforms here that could have a fundamental impact on how we do business in America. Lower taxes on small business owners. Get a break. Big companies get 100% expensing under this new tax law. What does that mean? It means that they can buy some big machine, and instead of writing it off over 14 years or 7 years or 9 years, they can buy it today, and they're going to expense the whole thing this year. Giant write-off. Well, that's some incentive for companies to buy now. And companies, by the way, get to do that for the next 5 years. 100% expensing. It's a big deal in this tax code. It doesn't get talked about a lot. But what are these companies going to do with all this extra money? Well, they're going to have more earnings and, they're going to do what's called CapEx, capital expenditures on new stuff to make them more productive and move forward. It helps them invest in their businesses, not just pay down debt. Corporate tax reform that says, hey, you may have a small amount of tax. You have to, by the way, all that money you've been storing overseas, you got to pay tax on it. I don't care what you do with it, but you're going to pay taxes on it. So, okay, now they can bring it back. They're going to pay a 14.5% to 7% tax on that money overseas. Now you can bring back $2.6 trillion in cash that's been sitting offshore. The idea that entrepreneurship might be incentivized as all these business owners bring back cash, well, and it's for the corporate space, bring that money back here to the United States. Do we not think that's going to be good for the economy? That's not a political issue. I'm not talking about politics. I'm talking about taxes. I'm talking about corporate balance sheets. I'm just talking about business as we move forward. And then we're going to give, again, we go back to small business owners. There are a lot of small business owners, and some folks may not qualify for this within the service sector. There's some limitations on this and the amount of money you make. But many small business owners are going to get a 20% deduction on their business income. And that gives this economy, I think, another shot in the arm, another incentive to grow. And since we've been stuck for the last 8 years, 9 years, averaging 1.9 to 2% in growth, how is it a political statement to implement some new ideas that might stimulate the economy? So just remarkable the blinders that Americans have when it comes to their politics influencing what they think will happen to this economy. And if you've had your head in the sand for an entire year because you think the world is ending because you don't like who's in Washington, you missed out on a 22% stock market last year. You missed out on a ton of economic growth. And you're sitting here as the train has left the station. And it's time to just take off the blinders and look at reality, look at the economic reality, and start to figure out how to use it to your advantage. How do you play the cards that you were dealt? And that's what we're here doing every Sunday morning, figuring out how to play the cards we are dealt. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.